Hey guys, this is Jose Baeza and welcome to another episode here in our YouTube channel. Before we get started, if you guys haven't done so yet, make sure that you click on the like, subscribe, and the share button so that we can go ahead and boost our algorithm and be able to share this with more people out there that are looking for information like this. Today, we're going to talk about the types of business loans, and we're going to explain the different types of loans that are out there available for businesses, the pros, the cons, and we're going to discuss lines of credit, term loans, SBA loans, equipment financing, and also invoice factoring. So let's get to it. So the first type of loan that we're going to discuss is going to be a line of credit. Now, there's so many different types of credit lines out there, such as credit cards, right? Which we're all very familiar because we should all have access to credit cards. And if you don't have access to a credit card, there's so many different available options in the internet that you can certainly research and pretty much just figure out which one is going to be the best fit for you. Now, a credit line can come in so many different types of forms. One of the most popular forms, like I mentioned, are credit cards. And that is something that can be under your personal, and it could also be on your business, right? A business line of credit. You also get a credit line where it comes in the form of a checking account. You simply have access to a checking account with a certain amount of money. You can write checks and you can use that money for many different purposes. You have a home equity line of credit. A home equity line of credit is simply a credit line that's given to you based on the equity of your home. When it comes to a credit line, the good thing about it is that you have access to credit when you don't need it. When you do need the money, you can simply just go ahead and either swipe your credit card and use it as if it was cash, or you can also go ahead and withdraw it depending on the credit line that you have, so that you can get access to that. Now, the cons on it is that it is a line of credit, so it's not necessarily cash. You can turn that into cash, but it does take a process. So when you certainly apply for a credit card, even after a credit card has been applied for in a while, they'll send you checks, starter checks. Even though you can use that, again, it does come with a fee, and you want to really consider whether or not that is going to take a toll on your end profits. The second type of loan is a term loan. Now, a term loan is given to you in a form of cash, and the cash is given to you directly to your checking account, right? The checking account is going to decide whether or not you can actually use that money and start purchasing real estate, and you can also do that cash, anything that you like. When it comes to a term loan, it's given to you usually, and it could be 1 year, 3 years, 5 years, 10 years. It doesn't really go longer than 10 years. You can use that money for pretty much anything. When you're applying, let me go ahead and rephrase that. When you're applying, the lender will give you the money for what you're looking for, but once you have that money in the bank, then you can certainly use that as cash, so you'll be able to use that any way that you like. Because of that reason, you want to make sure that you do your diligence and that you know your numbers and that you know exactly what you're doing with that you're responsible, because nobody's going to be looking over your shoulder to make sure that you're using that in a responsible way. The cons is that, again, it usually is short term, so you're looking at about less than 10 years on average. And the pros is that it's given to you in cash with no additional fees, because again, it's already in cash. There's still the monthly interest rate, and some lenders will have origination fees, but again, that's just part of doing business, right? If you're looking for a loan, term loan may be a good solution for you, but you want to consider the length of time on this particular loan. When it comes to the SBA loans, that's a different story. We're talking about longer terms. In order for you to get approved, the SBA loans can take months. Term loans can take weeks, maybe perhaps days in certain occasions. Credit lines could take hours. You can certainly go out and apply on the internet, and you would get approved within minutes or denied within minutes. Term loans takes a little while, but we're not talking months. We're talking about maybe weeks or even days. But the SBA loans does take a little while. So it all depends on how many people are currently applying. It depends on how organized you are. Here in our company, we actually have a department specializing just simply on SBA loans because of the amount of paperwork. When it comes to equipment financing, Equipment financing, it also depends on the amount of documentation that you have. And equipment financing is something that lenders like to see about the type of equipment that they're financing, because not all equipment can be financed. Not all equipment is eligible to be financed. It has to make sure that it meets certain criteria of the investors, so that God forbid, if something does happen, that the investors can sell it off and simply make some money back. But if it's something that is not very attractive, it's going to be very challenging. I'm not going to say it's not out there, but it is going to be challenging to find investors that are willing to take certain type of equipment. Very popular types of equipment would be like farming, and you have in construction companies, you have trucking companies. So a lot of that is very doable. We get that a lot. The last option really is more about invoice factoring. Invoice factoring is similar to equipment financing, except that invoice factoring is given to you based on the amount of invoices that you currently have. And this is where you find a lot of the government contracts, because some of the clients that typically come to us and are looking for invoice factoring is because they have a government contract, and the government tends to move a little bit slow. And so they are not able to catch up with the demand of whatever it is that they're trying to serve. So if they don't have enough money to cover the cost, then they have to make it up somehow. And that's when they'll go ahead and get something that is called invoice factoring, where they will be getting a loan off pending invoices. Does that make sense? The negative is that it does take a little while. Not as long as them waiting for the invoices to hit, but rather it does take a little while, because keep in mind, the invoices need to be verified, contracts need to be verified, everything needs to be verified, because we're going off of a piece of paper that says that you are owed a certain amount of money. And so that takes a little while. But again, the pros is that you do get access to the money real quick, because it goes back to what comes first, the chicken or the egg, right? If you don't have the money to serve the government for whatever reason that you're doing, then you won't be able to service that contract. And if you're not getting paid from that contract, then you're not able to serve them. So either way, this is a good option for anyone that has money coming in, but simply just needs a little bit more time to make that up. Every one of these options has pros, has cons, but at the end of the day, you still have to make your own decision. The line of credit, it's quick credit that is challenging to turn into cash. And I only say challenging is not because it's hard, but because there are costs associated to it. You can be paying anywhere from 3% to 5% to simply turn credit into cash. And if you're dealing with a real estate deal, 3 to 5% can make a big difference, right? Term loans, you're not dealing with so much with fees because you're not converting that. It's already in cash, but you are dealing with time. If you're looking for something much longer, then a term loan may not be the good option. But if it's something short term, that's a great fit. That is a great option for you. Term loans tend to be a really great opportunity for real estate investors. It tends to be a really great opportunity for people that are looking to grow their business, doctors, lawyers, anybody that needs cash at the moment. That is a great way, because again, typically the interest rates are low and you do get a monthly payment. There's no prepayment penalties. And so you can certainly use that money short term. SBA loans, just hold on to your horses. Make sure that you have the time it takes in order for it to wait. So if you're looking to negotiate a business, if you're purchasing a business and you're hoping that the SBA loans is the way to go or the way to finance, you just want to make sure that you have enough time on there, because you will be waiting for roughly a couple of months sometimes. We've seen it as long as 1 year where loans can get approved, right? So if you have the time, then great. Go ahead and get an SBA loan. It is very cost efficient because of the low interest rates and the longer term, but it will take a little bit of time. Equipment financing, as I mentioned, you just want to make sure that you're financing the right equipment, and you want to make sure that you have the documents in place so that they can see that you're going to be using that equipment efficiently and be able to make that payment. Invoice factoring, similar thing. You want to make sure that you have your invoices in order. You want to make sure that you have the contracts in order and everything is in alignment so that everything goes smooth and quick. And that be it, you guys. There's so much to talk about, but you know what? I'm going to keep this video short. And again, if you guys have any questions, make sure that you write that in the comments. Again, this is Jose Baeza, and it's been a pleasure sharing this information with you guys. And if you guys haven't done so yet, go ahead and click on the like, subscribe, and make sure you click on the share button as well. And talk to you guys soon.